Bitcoin holding up, y'all. 104, $324. 104, 324. What? $1,000 over here. Bitcoin conference still underway. I saw Michael Saylor a clip where he was talking about like funneling that power of the AI and becoming like a super power user. Whatever. If you look for Tales from the Crypt, whatever the rebanding is, it's so funny. I like to call, obviously, as you know, Facebook the Facebook. I like to call MicroStrategy, or yeah, I like to call them MicroStrategy. And same thing with Tales from the Crypt. Oh, Bravo's research, Game of Trades, no doubt, Game of Trades. Look, we got a nice hedge going on right now, no question about it, with Cardano taking advantage of that short side sell pressure that's happening today across markets. Trump obviously just doubling down, increasing the rhetoric over here, saying that for whatever reason, we have no details whatsoever. They're saying China is not abiding by their agreement. We have no idea what that means or anything like that. And we're seeing coming into the weekend a bit of well, risk off and potentially some big technical breakdowns. We are seeing Ethereum still holding its long, so that's just what we call a nice hedge that we have going on. Nvidia running into a trade and then running into a stop loss. There's been a like, just look at this. Let me count: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 in a row, and it's just getting beat up out there. I don't even know if we'll get a little bit of a cushion from Tesla or not. Meaning, like, is Tesla going to be able to lock in anything meaningful to make up a little bit of a buffer from that? T-triple-Q, it's got a long stop loss. Markets are rolling over. It doesn't look the best out there right now. And normally, when I see one of our moats, one of our strategies that has that many consecutive losses, to me, that's signaling that there's massive compression and we're getting ready for a big move. Only, I don't know, it's hard to I guess I'm not the most bullish of and I don't know if that means for Bitcoin, by the way. Bitcoin, obviously here, well, we're watching it. We got some levels, and we'll look at them together a lot more closely. But the birth of Bitcoin on the world stage seems to be morphing. Now, I don't think it's going to become a risk off asset anytime soon or anything like that. And no doubt it's a risk asset, but the dynamic is absolutely changing, and bullish on Bitcoin. We'll come back to that in a little while. Well, let me go through some positioning right now, because obviously Solana, Bitcoin on the sidelines. We got a nice hedge going on. Bitcoin bull runs still in the market, and it's got about $1,000 here, or I should say $10,000. Numbers are getting bigger. Around 94,000, it would be exiting at this particular point in time. So lots of room. This IBIT trade, this forward test on IBIT, is using GBTC. By the way, if you look back, and this is going all the way back to 2017, so you got a lot of the really explosive volatility going on. Just comes back down to 2000 forward test, picking up where GBTC left off. And I don't know if you do, I like to go into the style, and I like taking off pine labels, even though it shows highest drawdown um, from peak to trough. And this is getting close to locking in a nice trade. And if it does, that's actually a great forward test. It just, there was no carry. Took a good trade. That's what we want to see. I mean, we might be seeing it right now, Cabby. We said in the last 2 days, $19 billion of selling. Didn't really see, obviously, yesterday that selling really hit the market, and I think, and I believe, towards like the last half hour of trading. I don't quote me on this, but I feel like the last couple of days I saw some buy programs coming in, and I don't know if that's coming from buybacks or where that's coming from, corporate buybacks, but the selling wasn't really taking place. And if all that selling is going to take place today, it could explain why we're seeing some pressure out there. I would think that has a lot more to do with Trump and what seems like a further escalation when he's saying like China's not cooperating. I don't know what that means. You don't know what that means. He's got the court the appeals court saying, you know what, why this is being worked out. You have the tariffs in place, and it's just a mess out there. Um, I don't, I don't. Solana might be short. I don't. I, we don't use the short side on Solana, and the reason for that, let me go over to Solana. Not because it's not effective; it's highly effective, but because the win ratio is so small, so low, and most people really it wears on them. So I'm just gonna go in the short side only on Solana. Solana is not short, by the way, and you could see that a percent profitable of 23%. It's just very, very, very low. Now, in a bear market, when I say bear market, what do I mean? Well, when you know, think 2022 bear market, Solana is going to get absolutely wrecked out there, as is everything, right? Bitcoin even gets wrecked. However, Bitcoin, in comparison to alts, you all know the spiel and the deal, and Solana likely does good. But it's just, I don't think it's really smart to be executing Solana off the sell side for the amount that it does produce overall. Now you put them together, the buy and the sell, and you'd be like, wow, that's a massive difference. Yes, it is. And people would think that's a pretty strong system, right? Uh the return for drawdown, and of course we're looking at a lot of early history over here. Let's go from 2023, and you know 27% drawdown, 2 years 440%. A lot of people would like that, and I think that you know it's available if you want to use it, but I think that it's probably not a good idea. Look at that, actually take away the sell side in the last 2 years. Well, we've been in a bull market for the last 2 years as well, so there's that, and that's just a fact. And you know so if you could ever we don't have I tried making Solana bull runs. It's not possible because there's just not enough history. Bitcoin, going back here 13 years, has a lot more history to work with and for us to model. Ethereum barely has enough, doesn't really work out. Solana, Cardano definitely do not. So you have to kind of like, it's very difficult. Anyone who like trying to pinpoint when a bull market is ending and when a bull market is beginning, and when a bear market's beginning and when a bear market's ending, it's very, very, very difficult to do. So if you would know when to be able to be using the short side and then long only, that's one thing. I think it's much easier, much more appropriate for us to use long side only. And if you put in some more history over here, if we go to 2001 where things were crazy, you see even the return to drawdown is just much more attractive. So that is why Bitcoin in channel still showing a lot. No, uh, guys, there's I tried to cover it in each session so far. BTC 107, BTC 101, BTC 108. All of those did not receive an alert. It's not a Discord issue or an alert to Discord issue. It seems to be, even though it would be extremely rare, a TradingView issue. This happened not only with the alerts set up to go to Discord, it happened on everyone else's who have their alerts set up locally, right? On their own machines, because they don't use Discord alerts. They want that. And it's just whatever it was alarming to see TradingView have an issue like that. That's what it was. But no, Bitcoin just no alert sent across the board. Not sure really what to make of it. Yeah, there could be the time when Solana really shines on the short side, I believe, and no doubt. So we got the beautiful dance going on right now. Equity markets look like they, and again, is that quarterly rebalancing right now? Are we seeing that $19 billion of selling hit the market? This is a trend line that seems off to me. Oh, because I have it on log. And guys, I don't know, to be honest. I always prefer looking at log and linear. If you're trading on a small time frame, 2 hour, linear has a strong advantage to log. 2 hour, 1 hour, 4 hour on a small time frame. The linear has a significant advantage. Um, Aside from that, I like to look at linear. I mean, is this looking at 2 months? I suppose, and this is just a preference, that most traders would argue that there's no way to you would default towards the linear. I imagine. I don't know. Um, and that's hard to do for. It was an overnight signal. Americans, you know, if you're looking and you're looking and you're waiting for that alert, there was a pending alert that was sent, but then yeah, I mean, and ultimately it, it's hard. So that's why I had the idea or the thought process and was saying, God, oh, you know what? Like buy side boost, so effective. Does that work on the daily time frame between Ethereum and Bitcoin? Phoenix Fire's got his attention for execution reasons, and it seems that rough strokes here. The 8 hour is outperformed, but I think Phoenix Fire. Please correct me if I'm wrong when you get the opportunity. I'll make sure on Monday to really just clarify. But I think for preliminary showings show that since 2017 drawdown between using the buy side boost 30%. I think he's leaning towards when Ethereum enters first, taking the 100% allocation. It's kind of like if you think about it, the way that we look at trading Ethereum and toggling off ST2 and ST1, right? And when when Bitcoin bull runs, momentum's to the upside, we loosen up the filter on the buy side on Ethereum. And it's kind of a similar situation. If Ethereum's entering the market before Bitcoin, that would suggest that liquidity is ample and Ethereum is taking it. So you see that Ethereum will get the full allocation. It makes sense. And Bitcoin, obviously, if it, or I believe is leaning towards it not. Is Trump back to uh, parlaying with Powell and as far as rates? I don't know. I mean, it seems to me that we're looking at bond yields. No one's buying bonds, right? Now I can't say that. The 5 year auction yesterday, 5 year debt, right? It's not shorter term debt, not long term debt, was a record showing up by foreigners. So foreigners want U.S. debt. No one wants long term debt. That's the hard part. Yeah, Jay Cora. That right there is something I'm interested in too. And well, I'm just interested. We need the data to know. That's a good one right there. Or dare I use a little potential creativity and thinking. What does it look like between Bitcoin bull runs and Ethereum on the daily? And does that offer any opportunity, do you think, to get in early? All right. So I just want to just bear with me 1 second for fun here. And so Bitcoin bull runs is in the market. Ethereum does not enter ahead of time. Yeah, same thing over here. Does Ethereum on that early entry, same time, no early entry. This is one. I mean, this is not something that's going to help us here. I don't think. But look at this. Here's that early 2023 entry, beating Bitcoin on the daily, and you would see that Ethereum had a mega move, but that could be a one-off instance. Here's another one where Bitcoin out of the market, Ethereum taking that nice little. It's look, it's for Jay Cora. That's awesome. Oh, I didn't change the overlays. Show overlays. Preferences. Videos. Stream. Figure it out later. I got to get rid of those overlays. So that's a good one. I'm going to leave up the Bitcoin bull runs over here, and I'm just going to put it to a sensational color to bring my attention because I like that idea. I'm not like a pink guy. I'm not a purple guy either. What's something that will get the red will get my attention? Keep it red here. All right. So let's take a look at what's going on over here. And we're seeing equities right around their lows, no question about it. The whole old school macro crew, the old school macro crew, the guys that in 2020, they were like insolvency event. Guys, it's so funny. I don't care. I like, but it's so funny. Do you remember the 2021 buy bonds and wear diamonds meme? What a what a disaster that was. It's probably the worst trade of the decade. Um yeah, Paraboo. Great to have you here, brother. Um what are we seeing the continuation? Our yields bid on that sell impulse. Now I'll check out our chicken scratch chart a little bit of bonds and why I don't think there's going to be much follow through. Maybe indeed Bitcoin under pressure. The dollar here holding in. We'll look at the dollar very closely, but I just want to point out that gold is consolidating underneath resistance and oil broke down for the next leg. We do have a bit of a risk off market. We saw that core PCE came in as forecasted. Super core PCE, which is ridiculous if you ask me. This is taking away energy. It's taking away healthcare and housing, everything that's important, just taking it out of the picture. But it is now turning negative, and there's the thought that maybe the Fed is behind the curve. Y'all probably already saw it. The Atlanta Fed GDP tracker is now soaring up from 2.2% to 3.8%, and I think they're changing the way that imports are handled over here. I'm just gonna whatever. Like the last quarter was all messed up, and if this quarter is all messed up, it's just a reversion to the mean. Costco's earnings came in well, and that's important only because of Costco is a good barometer of the consumer from my perspective. Nvidia looks like it's breaking down. Yeah, this is the daily. So from the daily, I just want to go ahead and just change that I guess off of that low. That's a breakdown. I like the lower time frame here. It's a little clearer. And we said that the yellow line would be like a for sure confirmation of what we're looking at. But this looks like that we have the ability here today to trigger a sell impulse close below that line. I mean, it looks like it's active to me, but who knows where it closes. And that could spell some some further pressure, or is it actually only because of all of that selling we're seeing today from for rebalancing? I, you know, Core Weave again. This is the massive IPO, nice liquidity grab, trend line break. Luke on the discretionary channel has a fantastic chart on yields, and very similar situation he's pointing out. So this would be bullish for bonds the way that he's, but look at that liquidity grab, right? And then the trigger is on the breakout of the trend line, and that wound up being a massive, massive, massive run, and that would be where it's breaking down. Um, let's look at yields because I keep mentioning them. And so we got the 10-year, and I'm watching this looks like a really big consolidation that's taken place now for about a year. And when that breaks, I think a big move's coming. Expectations are on the sell pulse that we head lower, but that to me, until we break down, is not any type of affirmation, confirmation. I think we're headed higher, but I'm wrong often. I mean, so we'll see. But sell impulse underway. And for those that are long bonds, that's a good feeling for sure. And because of that, I hope there's carry, you know? I forgot where I was. The dollar here, though, we had the change of positioning to the buy. The buy came off of this breakout right over here. Looked terrible yesterday, no doubt. And not only did it look terrible, it was just like, oh, should we have waited for confirmation? Maybe. But the exit over here and reverse will be a close below this line. Trade is still holding on, razor thin. It looks like it'll be holding into the weekend. I put a tweet out this morning talking about how whether this chart right here breaks out to the upside or downside is likely going to have massive ramifications for financial markets. The Bank of Japan is meeting on, I think, the 16th of June. Yep. And that likely, or that could be a potential trigger for what happens here, specifically if they have a policy change. If they feel that, and it looks like they're getting a little reprieve in their yields, or at least U.S. yields. So I imagine also Japanese yields, and if they're getting a reprieve, maybe they're not going to be forced to act. Maybe we see some further consolidation to continue. But if they were to go ahead and have to act in the maybe like defend their bond market and reenact yield control curve and print yen to do it, and this thing breaks out to the upside, massive risk on, and massive risk on. And I wonder, it looks good to me here. I'm watching that what might be I think is an underbelly. And the two things is this ultimately what we would need to see? That's a big move. Maybe we'll have to be aware of that. And then more so, because if you just extend that to the left, I thought that was going to hit pretty. It doesn't, it's not really that pretty. So I thought it would. Or is it something like that that is the final boss? I don't know, but this is a good little um pattern developing over here. And I also see a head and shoulders. And if that breaks down over here, not only I like this because this is kind of going back to 2000 and well, December 2020, January 2021. Trying to figure out what the significance was of what was taking place, but this is kind of where from when on US bonds have just absolutely entered into that massive sell-off. So that could be the reason. But that trend line over here, which is structural, right? And if that trend line breaks over here with the break of that horizontal, and we see all of a sudden yen go crazy bid, that's going to suck a tremendous amount of liquidity outside of the financial markets. That would be a terror sign. And I think that that would likely cause some really, really strong um, ramifications within the financial markets. Speaking of ramifications in look at this though. I think of bonds when I see this, and I think of bonds like this when I see that. Hold on one second. Let me just go ahead and paint some pictures. So that's the DXY, Jordan. That's not bonds. And let's come to a higher time frame. Y'all remember this one right here. That's what it reminds me of. This is 2016 to 2018, and this led to obviously call ending in the COVID lockdown aftermath, and that looks like a similar pattern as this. This is U.S. dollar Japanese yen weekly, pointing to what happened in 2007 and 8 until today. Maybe I see the head and shoulders. That would be. Is that a stronger signal? Is he saying that we broke down? Maybe. I prefer my confirmation here. So maybe. Well, that's interesting. Let me keep this up here just to know in the future. But that's interesting. One other thing that I really wanted to point out today to you all is that we're just short a little thumbs up today. Oh, how do I get rid of this, Aldo? Delete it here. I'm gonna figure that out. I got to get the fade out. I got to get the fade out. This is a video I saw a few days ago, and Luke Groman talking about U.S. capital controls are inevitable. Inevitable is a big word over here. And then Zero Hedge putting out this article. Look, this is coming from the big beautiful bill, and the nuclear option hidden in the big beautiful bill. Section 899 creates the scope for Trump to transform the trade war into capital controls over here. And you could see that Luke, let me put the link into the comments for you over here. Luke gets into a lot of what he's believing, putting all those pieces together, what ultimately happens. I want to just share a small clip over here talking about when I talk about this being the most difficult portion of cycle. This might help highlight that a little. Let's go ahead and listen together.
It's going to go to the moon. That's probably actually in U.S. interests
He said,
in a
hold
number
on,
of
let me
different ways.
just rewind that for you.
It's going to go to gold. Gold's going to go to the moon. That's probably actually in U.S. interests in a number of different ways at this point. But until the dollar gets weak enough to really bring back foreign direct investment here.
So number one, weak dollar. And Luke goes into, if you watch this video, he goes into, first of all, it was very clear. We see a lot of U.S. defense talking about one of the greatest risk to the U.S. Is that its manufacturing is relying upon China and overseas, and that this was apparent during the global lockdowns. And then he talks about why it became even more apparent during the current Russia-Ukraine war. So that's number one. And then the current administration, their strategies to bring back manufacturing, and then you see memes about like Americans working in sweatshops, and obviously, if you're like genuine, that's not what they're trying to do, but they are trying to bring back like manufacture weapons here, right? I have a friend who works for a defense contractor, and before I knew that, I was calling them weapons dealers. I mean, that's what they are. And he definitely acknowledged the fact. Uh, and anyway, where was I going with this? And they are looking for things like pharmaceuticals and things that you would and chips, of course, semiconductors. Um, so in order to do that, though, they need a weak dollar. I'm reminded of our chart of the DXY in Bitcoin, and we see as the dollar consolidates, Bitcoin bottom and begin its run up to where it is now. And then when the dollar begins to really sell off, we really begin to see the ascent of Bitcoin. So if the dollar continues to devalue, right now we're currently position long, holding on by a thread. If we make that next leg down and And if the dollar continues to devalue, that's likely going to be very beneficial for Bitcoin. Hold on, there's a lot more.
There's a period of time politically where the people are going to be very unhappy because they're going to come in every day and stocks would be down and until the dollar was weak enough that there's a possibility.
Okay. Do you remember when we were seeing the mega sell-off in equities during April, and that whole time the dollar was getting hit hard, right? So if Luke is proposing here the way he sees things developing, further weaker dollar, further pressure on equities. Obviously, you see other markets like it's hard now as the US has rebounded radically. I don't know if it's a bounce or a recovery. And up until that massive, massive recovery, and speaking of which, right? So US up 18% in 7 weeks, 35 days. And here's what the S&P did in similar behaviors. So I'm moving out to here to 9 months and 1 year later, and moving forward 3 quarters, 4 quarters away, it looks entirely bullish, with the weakest only being up 9.5%. But the average a year later is 27% up. Really, really bullish. The short term, and you can't not include this one over here, right? Is it an outlier? Maybe, but and then this is where we are right now in the next few days. And in the next few days, as you go 1 day later, 2 days later, 3 days, week later, markets are generally under pressure, which they are now, right? So as Luke was saying, though, he's talking about as in April when the equity markets were under a lot of pressure, dollar was selling off.
It's very possible that really the Fed just is forced to the treasury market breaks in 5 days, stocks go down for 5 days. And quite honestly, as I talk through it, that's probably what happened is like we put those capital controls
Whoa,
in,
whoa, whoa.
but
Hold on.
until the dollar
So Luke's talking about when the capital controls are placed on, and watch the whole video for context. He's saying likely what you see is gold begin to moon, Bitcoin begin to moon. You can see stock markets like I'm reminded of March 2020, and then he talks about the bond market breaking, which I imagine that means to me going strongly bid. Now that sounds crazy. Well, how could it break and how could it go bid? And I'm reminded of this area over here, and there were no buyers. So how's it going bid? I don't know. Like but I do know that there were no like the Fed had to come in and be the buyer. And people talk about how interest rates can't go down because there's no buyers even at these levels. How could the Fed lower rates when you're seeing such growth? Job market, well, next week we get a lot of data, but how could the Fed restart QE? They need to get rates low to do that. They can't do it's not effective unless they get rates down to zero, near zero. How like and if there are no buyers, maybe Luke, aka we need rates low, would be able to give a little insight into this. But all I could say is what is, not why. And in this case, when there was no buyers, the Fed had to then bring the rates down, jump in, and then they were the buyers. So they will be buyers. It will be the Fed as they print. Luke sees this happening. A lot of people say we're not returning to zero bound, we're not returning to QE. Luke is game playing this out as what is actually the most likely result.
gets weak enough to really bring back foreign direct investment here, there's a period of time politically where the people are going to be very unhappy because they're going to come in every day and stocks would be down and until the dollar was weak enough that there's a possibility. It's very possible that really the Fed just is forced to the treasury market breaks in 5 days, stocks go down for 5 days. And quite honestly, as I talk through it, that's probably what happened is like we put those capital controls in, gold goes to the moon, Bitcoin goes to the moon, stocks tank, bonds tank, dollar tanks. 5 days later, bond market breaks, Fed comes in or treasury comes in, and then stocks go to the moon, bonds, Bitcoin and gold go to the moon even more. And then like it can kind of work. And I think that's
What a time that was. That the birth of CTM. What a time that was. I wish, I wish, I wish I had the foresight we were so hyper focused on Bitcoin and at a good time because like Bitcoin really like when we first started streaming and my focus was on foreign exchange markets and US equity markets and most people were not really aware at that point for the bullish case for Bitcoin. And when I would start talking about Bitcoin, everyone would get all angry and mad. And then like obviously it was greatly embraced. But in retrospect, I know that you saw Druckenmiller come in recently and he shorted the 10-year as the Fed began lowering rates and he put a banger of a trade on. If you remember with me and if you remember during the summer of 2022, I put the most important trend line in the bond market, and we had the black diamond. This was our summer sessions in 2022. I remember it, but not with the correct foresight, right? Like I just expected that yields were going to continue to sell off. I had no idea of the overall ramifications. I was not really forward thinking in regard to the overall debt crisis. I did not have any idea to understand that it would be a couple of years later when the US's interest rate obligations were now outpacing the defense spending. I didn't have the correct awareness about the ramifications. And Druckenmiller put the trade on over here. Right over here, Druckenmiller put the trade on. So, I mean, good trade. Yeah, but that's late. But this is late too. This was the time to put the trade on down over here. This was the time, like, and we should have been short long term debt and we should have been long Bitcoin. And the reason I'm highlighting so much is because I think it's the most important thing to be aware of if this were to play out, if the Fed needs to actually come in and reinflate the system. Right now, they're going the other way, but eventually that's going to stop. Here's the last time they were going the other way. Bang! They're going the other way now. Eventually, eventually. Bum. What if the shift to manufacturing, and I don't know if there's a shift so much as that just reshoring of certain, and a tech recession, we're seeing a lot of money pulled out globally from US stock markets, definitely was highly invested in US tech. Um, those companies will need to reallocate guidance. Prices will drop, bonds, gold, Bitcoin go up. So bond go. I remember the dollar going up in similar portion of cycle. We're not there yet. We're so close to it, but I want to move towards right over here. So that was in this little area where bonds were going up right before the massive breakage. That's when dollar was also going up, gold was going up. So bonds are not going up; bonds are going down in that place. I don't know, Cabby. You could be perfectly on point. So Luca is talking about obviously what what follows then after the carnage is then the return to growth and ascent of risk once again running hard. But that's why it's the most difficult point in cycle because we don't know how long it takes between now and if that type of risk off were to occur, which is why this is a great chart for us to be focused on over here because this is going to likely be the key to what like when that happens. So I'm watching it closely. We'll be watching it closely. All right, great session, fun session. Love the energy. Yeah, everyone rest up. Have a great weekend, and I'll see you all on Monday. Have a beautiful day, everyone. Have a great weekend. God bless you. Big shout out, everyone. Lots of love on the replay crew. See you all soon.